Hey guys, so in today's video, I'm going to be teaching you a super simple ICT Forex trading strategy, which includes the power of three. Now, if you understand the power of three, then I guarantee that you will become a profitable trader. So if you don't understand it, I really need you to watch this video all the way until the end. So in this video, I'm going to give you a step-by-step breakdown of exactly how you're going to find and execute these trades. And I'm going to give you a real life example of a trade that we actually took inside of the VIP group so that you can see the trading strategy in action. So let's jump straight into it. And we're going to start off with me explaining exactly how and when to look for this setup. So first and foremost, what is the power of three? Well, boiling it down to its most basic form, it simply means accumulation, manipulation, distribution. You're looking for accumulation, which can be in the form of consolidation. You're looking for manipulation, which is manipulating either the high or the low of that consolidation. And then you're looking for distribution, which is a continuation of the trend going in the opposing direction of the manipulation. Now that was a lot of words, so let me give you an example of what we're going to be looking for. So let's say right here, we've got all of this consolidation. Now this becomes our accumulation, step one of this trading strategy. So what we're going to do is we're going to highlight it with a nice box so that we know where the high and the low of this accumulation is. So now that is step one. So let's put a one right there. So step one, identify accumulation. So moving on to step two, we now want to see manipulation of either the high or the low. So let's say, for example, we get a accumulation and a manipulation to the upside. So now we've swept the high of this consolidation. Now, once we get a sweep of the high, what we're then going to do is look for an indication that price is looking to distribute in the opposite direction. Now for this, there's multiple different entry schematics. I teach 3 different ones inside of the VIP group, but for this strategy, we're simply going to stick with the most basic one, and that is going to be a market structure shift. Now, what does a market structure shift signify? It signifies that price is now going from bullish to bearish, giving us lower lows, lower highs, and lower lows. So once we see that we've had accumulation, manipulation, we then can take an entry on the distribution, and this is what we're interested in because this is where we're going to be taking our entry. So let's clean all of this up. We've had a accumulation, we've had a manipulation, and now we're waiting for a distribution. We get that market structure shift, and we're going to identify the inefficiency which caused that market structure shift, and then we're going to take our entry at the open. We're going to put our stops above the most local high, and we're going to target the opposing liquidity, which in this case would end up being the low of this accumulation. So relatively simple. We have step one, which is accumulation. We then have step two, which is the manipulation of that accumulation. And then we have step three, which is going to be the distribution from the accumulation and the manipulation. So that's step one, step two, step three. So once we put all these 3 steps in action, we're then going to be able to take a trade in the distribution phase. So let me give you an example of a trade that we actually took inside of the VIP group. And to get things started, what we're first going to be doing is identifying our accumulation. Now, where are we going to be identifying the accumulation? That is a very key question. Now, for me, I like to identify the Asia session range. Now, the reason for that is because during the Asia range, there is a lot of consolidation and the markets are generally consolidating. There's not much happening and they're usually just going sideways. So when London session kicks in, the added volume that gets injected into the market is usually enough for us to manipulate either the high or the low of the Asia session range. And then we distribute in the opposite direction and continue that into the New York session. So this is where you have to understand the sessions and all of these different things that go along with trading in the Forex markets. And if you don't understand any of these concepts, then I'd highly recommend clicking that link down in the description to become part of the community where you get access to my full A to Z trading course, where I teach you everything that you need to know in order to become a consistently profitable trader. So all of the different concepts such as liquidity, fair value gaps, order blocks, order flow, premium versus discount, different trading strategies, trade recaps, even psychology, everything is covered inside of my group. So if you're not part of the community, click that link down in the description. But once we've identified our accumulation, which is step one of this entire process, we're going to mark out the highest point and the lowest point inside of the Asia session range. So anything that happens in between the times of midnight and 7 a.m. UK time, you're going to find the lowest point and you're going to find the highest point, and you're going to mark it out with this nice clean line. Now, once you've done that, what you're then going to do is wait for manipulation. Now, if I play price on, we can see that we get a manipulation of the highs. So now we've manipulated the highs, we're then going to look to distribute in the opposite direction, which is we're going to be looking for a short position. Now, had we manipulated the lows, we would then be looking for a distribution in the opposite direction, and we would be looking to take longs. However, since we've manipulated the highs, this shows that price is looking to manipulate the highs and then push in the opposite direction. So once we've seen all of that, what we're now going to be doing is waiting for price to show us that it is actually looking to go in the opposite direction. Now, in order for this to happen, we have to identify what we're doing in terms of structure. As you can see right here, we've got this higher high, higher low, higher high, higher low, higher high. So this means that price is pushing relatively in a bullish manner. So we can't enter a trade when price is bullish. If market structure is just putting in a series of higher highs and higher lows, then it would be like trying to catch a falling knife if we were to short at a random position, right? We need price to indicate to us that it is actually looking to go short. So for that, we need to wait for a market structure shift. Now, in order for us to get that market structure shift, price has to break and close below the most local higher low. Therefore, we need price to break below this higher low right here and give us a lower low, and then expectational order flow tells us that we should get a lower high and then a continuation lower. Now, this is the move that we are looking to get involved in. So until that happens, we can't enter a trade. As we can see right here, this is a wick below that low. For me, this does not signify that we've had a change in direction, because a wick isn't a close. A body closure below this low right here is what I'm looking for. A wick to me is just a sweep of liquidity. If we continue to play price on, we can see that right there, we finally get that close below. So now once we get that close below, this indicates to us that price has flipped from bullish to bearish and is now looking to go short. So once we can identify all of this, we're now going to find the area of inefficiency which gave us that market structure shift. As we can see right here, we've got this beautiful fair value gap, and this is where the volume came in, which gave us that market structure shift. So once we've identified all of that, we're simply going to be taking our entry at the open of that fair value gap. We put our stops just above the most local high. For us, that would be right here, above this higher high. And then what we're going to be doing is targeting the opposing liquidity, and that would be the Asia lows. And that is how we're going to frame up the trade. Now, this is where I actually sent the trade into the VIP group, as you can see, on the 6th of December 2024 at 9:19 a.m. I sent this trade into the VIP group and I told everyone to enter this with me. And again, if you want my trade setups every single day, click that link down in the description, become part of the VIP group, and you can take all of these trades with us. But once we've done all of this and we've understood where we are in terms of our structure, we've found out the accumulation, the manipulation, and the distribution, we're now looking to get involved in the distribution phase for price to go lower. So now all we have to do is play price on. As we can see, this trade did get a little bit close to our stop loss. However, that is why we place our stop loss against the most prominent high, because if price does break above this high, then that indicates that the trend has completely flipped and that we were completely wrong in identifying this setup, and that price is no longer looking to go bearish. So if that happens, then we know we should definitely not be in that trade. But as we can see, price then does play around for a while, takes us back out into profit, comes back up, and then eventually we get a push straight down. Just before news, we get that push to the downside, which hit our take profit, and then news catapulted it in the opposite direction. But that is a nice 1 to 1.4 risk to reward. So for every $1,000 that you risked, you would have made $1,400 in return. So that is how you identify accumulation, manipulation, and distribution, and put it into a trading strategy which is going to make you extract profits from the market, as we did right here, and TP was hit for everyone inside the group. So again, if you did enjoy this video, then don't forget to leave a like, comment, and subscribe. And if you are struggling with any of the concepts that I've mentioned in this video, don't forget to click that link down in the description. But on that note, I'll catch you guys in the next video.